What's up everybody, this is your host Yasin. Thank you for joining in. In this video, we are going to talk about Bitcoin and its relevancy in today's economy. Why the hell Bitcoin has gone through the roof, broken all sorts of records in the previous times. We're going to touch upon that, so stay tuned till the end. I hope you will get a lot of value out of it. Let's dive in. In the form of full disclosure, I do not own any sort of cryptocurrency. I have never traded cryptocurrency in my life. I would like to do an objective analysis here to understand what's happening behind the scene and why this is shooting up the price of Bitcoin. Bitcoin was started as a social and computer engineering experiment by Satoshi Nakamoto, who's a person, nobody knows who that person is, but that person is supposed to be the inventor of Bitcoin. And it was started as a social experiment to exchange monetary benefits between two computer geeks, like a peer-to-peer transaction. Since then, very quickly, it became a global phenomenon. People started using it as an alternative currency in order to exchange between the two peers directly outside of the banking system, because it bypassing all the banking and financial regulatory system, giving hard ones to all the regulatory authorities, because it can be misused by money laundering people and all sorts of other bad activities that happen in the dark web. Because it is independent of all the banking and financial system, it may give people some sort of a flexibility and independence to avoid bank fees and other sorts of charges, but at the same time, it gives criminals a way to transact for illegal activities. Now, recently, Bitcoin has gone through the roof. It has hit 66,000 USD mark, never happened before, and all the Bitcoiners are jumping up and down. Having said that, everybody should own Bitcoin or at least some wealth into it. Not because it's going to go to $100,000 or $500,000 as someday, but because I would like to keep some sort of my wealth into Bitcoin, because I don't trust my banking system. Because if I want to buy Bitcoin, I will only do it if I want to keep my wealth outside of the banking system. Because if and when this banking system collapses or shut down on me, I still have access to my wealth at any time I want. I don't want to be in a situation where people like Lebanese or Zimbabweans or Venezuelans are in a dire situation where they don't have access to their wealth, and their wealth has completely collapsed because of the banking crisis in those countries. Well, the other reason could be I want to protect my purchasing power. You see, in today's financial world, our fiat currency system, the global monetary system, is losing its purchasing power. And in the inflationary times like this, I may want to protect my wealth into something that will hold my purchasing power. So Bitcoiners would always argue saying, hey, this is an alternative currency, right? I would like to use it as a wealth hedge, and it may replace the global trade of currency at some point in the future, like euro-dollar system. But let's take a closer look into it. So for a currency to be globally traded, you have to have three major criteria met. Number one, it has to be globally recognized and accepted. Number two, it has to have people's confidence and trust in it. And number three, it has to be stable. If a currency do not have these three criteria met, there is no way you can adopt this currency at a scale. Let's dive into it, each of those one by one. So number one, it has to be globally accepted and recognized. So think about that. Very few online and physical retailers today accept Bitcoin. You cannot just walk into a store and buy a box of cereal with Bitcoin, right? For a currency to be globally accepted and recognized, you have to meet this criteria. Bitcoiners will argue that, Yasin, let's be honest, this is also applicable to a normal currency as well. Like if I go into Europe and exchange my Canadian dollars and use my Canadian dollars to purchase something from a store, I may not be able to do that. So what I will do, I will go into a currency exchange bureau and exchange my Canadian dollars in British pounds, right? But not every currency exchange bureau today accept Bitcoin. So that's a problem. Number two, it has to have people's confidence and trust. Okay, In order for people to trade their physical asset or physical tangible product with a currency, they have to have a trust and confidence into the currency, that it has some value. Today, a common Joe and Jane, they don't have that trust in Bitcoin. Number 3, it has to be stable. And this is where Bitcoin has completely failed. It is so volatile that it can go up and down in a second, right? And imagine if you're going to purchase a product in Bitcoin, you want to make sure the profits that you are getting by selling a product has to have some value, or it keeps its value. You don't know which way it's going to go. So basically, your Bitcoin currency can either go up through the roof or it can tank in a second. So no one wants to trade in a currency where it can fluctuate violently within a matter of seconds. Is this a gamble? Well, let's take another look into it. This was started as a social and computer networking experiment to exchange monetary benefits between two ordinary people outside of the banking system. And since then, it has become a completely speculative play. Some are keeping it to store their purchasing power, but a big majority of the people are trading it just on the speculation basis, thinking they will get rich quicker. Well, Bitcoin is not an asset. It is not a financial instrument like bonds or stocks or real estate, because you see all these financial assets, their valuation depends upon their performance, their revenue, their sales numbers, right? Their profit margins and their impact in the environment and in the society. Versus what Bitcoin is doing, it has no value to add, zero, nada. It doesn't produce any goods and services in the economy. You see, people have lost a sense of true wealth. Money is not true wealth. Money is just a representation of your purchasing power. The wealth is created by producing more than what you consume. Okay, your access productivity. If you're not producing more than you consume, you're not growing your economy. You see, in today's times where you see the stock market is going through the roof, Bitcoin is going through the roof, commodities going through the roof, real estate prices going through the roof, it is not happening because we are producing more than what we consume, not because we have access productivity, and not because the company we are investing in are producing more goods and services. It is only happening because of this free money, this funny money, this helicopter money, flowing through the government and central bankers. They're pumping money into the system, which goes into the economy and jack the asset prices up. You see, when it happens, then it is creating bubbles everywhere. Real estate bubble, stock market bubble, Bitcoin bubble, and it has to collapse at one day because it's a fake economy. You are not producing any more goods and services, but you're injecting this artificial money, which is blowing up these bubbles everywhere. And this fake economy has to collapse. It may not be imminent, but it is definitely not inevitable. That's all, folks, for today. I hope this has given you some clarity about Bitcoin and its extraordinary valuation and connection to the economy. If you like it, give me a thumbs up and hit subscribe and pass on to your friends and family. And until my next video, take care.